But Weiss, I want to go to you first on this. What happened with the NASDAQ yesterday? Okay, it was the worst day since April 25th. It's on track to snap its 6-week win streak. The worst day for FANG Plus, says Bespoke, since February of 19. February 19th. What do we think about this trade in the here and now?
Well, I think that that you're seeing a shift, somewhat of a shift. You take a look at Deere yesterday, right? That had a big day. I think it was up around 3%. So money is sort of trying to go to the so-called undiscovered or beaten up areas that really haven't moved up. And fortunately, if you're looking to hunt there, that's a big area because you have the seven stocks took the market up. So I think that you had a lot of people get in, and I think I know, because I was one of them, get into some of those names, specifically NVIDIA, which I'm now out of, to chase the momentum, to follow it, think that would continue. And it did. Very tight stop on it. So I'm out of it. So those that got in last are the weakest hands and the ones that are selling because they think it's going to go to the moon. They're following every analyst coming out and raising their price increase for no other reason than the stock price is higher and they want to keep it a buy. So you've lost some momentum there. I don't think it's over. I haven't sold any Microsoft. I fully expect Microsoft, or I wouldn't be surprised if it goes down further, whether that's 3% or 10%. Don't care because that's long-term hold. That I find is a reasonable valuation. The ones that hit the unreasonable valuation, as I said, where the Momo traders aren't getting satiated at this point and are risk losing it, that's why we're seeing sell-off. It'll be temporary. They'll be back. I don't think you're going to hit these kind of valuations consistently going forward.
I still think that, you mentioned Wall Street upping price targets just, merely because the stocks continue to go up and they're just chasing it up. Josh, I do find it interesting, though, whether that's really the case or not, related to Oracle, which you own. Deutsche Bank makes a bullish call on it today. They do not think that, the benefits of generative AI are priced in yet. And I think that's where most analysts are in the way that they're talking about the various stocks within the AI space, whether it's, Adobe, for example, that gets a target bump today, and the stock is up sharply. It was our chart. It's going to be our chart of the day. I don't know. This is a chase, yes, but is it a chase based on, I don't know, reality of not really knowing what's priced in related to AI or not?
Yeah, I don't really know the answer. Goldman Sachs put out a piece this week saying something to the effect of AI could add as much as 1% to GDP, GDP growth every year for the next 10 years. And if that's right, then none of that is in the stock market as of yet. But it's highly speculative. And I think they're just laying out a framework, like what does AI mean? And then you have whole other group of analysts who are thinking about it in terms of productivity. How much will this, how much productivity, how much excess profitability relative to what we're forecasting? I try not to play that game because I'm not smart enough and I'm not good at it. I'm just focused on price. And when you focus on price, you understand this concept where, like an Oracle, for example, this is a stock that really did nothing. It trailed all of its mega cap tech peers for a decade. Now, all of a sudden, people are waking up to the fact that they are a major player in cloud, and they do not have this huge cloud build-out the way that AWS and Microsoft have already. So the new stuff they're building is now cutting edge and way ahead for the AI arms race, and that's a really important component here, too. But Oracle is a stock that I came into because the technicals, it was breaking out. And the story, everybody learns after the breakout. They says, oh, this is why Oracle's up. AI. Okay, sure, whatever you want. So there's a lot of stocks like that in tech. I want to go back to something that I think is more important, though, which is that the bulls lost the narrative this week, but the bears lost a very crucial narrative also. Here's the narrative the bulls lost. This whole positioning concept where everyone's bearish. Well, if you look at the latest AAII, that's now out the window. The bulls are back in control. So we can no longer call this like a reversal in sentiment or a positioning rally or everyone's offsides. I think that part is over, and actually the S&P 500 has been trading above its 50 and its 200-day moving average since late March. So everyone got the memo. I don't think it's a positioning rally anymore. The problem, though, for the bears here is that another narrative is out the window, which is that it's just 7 stocks. That's not true anymore. And this week, I think, knocks that out of the window. Small caps, 76% of Russell 2000 stocks are now above their 50-day moving average. That's versus 62% for the NASDAQ, 60% for the S&P. This is the first time small cap stocks have had greater relative strength than both the NASDAQ and the S&P 500 since the start of this year. And a day like yesterday, where they beat up the FANG stocks, makes that trend even more pronounced. The Russell 2000 is outperforming the S&P by 5% this week. That's notable. It's a very big catch-up trade. And one thing I want to tell you, like whether or not you missed the opportunity, I don't think so. The forward PE ratio for the S&P 500 is 18.5. The forward PE ratio for the mid-cap 400 and the small-cap 600 are 13. That's a huge disparity. And maybe they should be cheaper, but 25% cheaper, that might be too much. That's what's going on in the market this week. That's the new narrative, and I think people better get used to that improving breadth and stop repeating this thing, oh, it's just 5 stocks, it's just 7 stocks, because that's not the truth anymore.